Hi everyone, my name is Allison Turkle. I'm the Asset Opportunities Vista at the Sargent Shriver National Center on Poverty Law. Welcome to our webinar, Mobile Banking, Can the Unbanked Bank on It? I'd like to thank our sponsors for this webinar, the Center for Financial Services Innovation, the Federal Reserve Bank of Boston, and Consumers Union. Just a few housekeeping notes before we begin. If you have technical difficulties, please contact Becca at 312-368-1104. And please submit questions during the presentation using the control panel, and we will have a question and answer session at the end of the webinar. Our panelists for this webinar today are Marianne Crow, the Vice President of Payment Strategies at the Federal Reserve Bank of Boston, Rob Levy, Manager at Innovation and Research at the Center for Financial Services Innovation, and Michelle Junn, the Senior Attorney at Consumers Union. First up, we have Marianne Crow from the Federal Reserve Bank of Boston. Her primary responsibilities include the industry analysis and applied research on emerging retail payments, with a current focus on mobile payments and leading the mobile payments industry work group. Her previous management responsibilities at the Fed Reserve include Consumer Payments Research Center, Retail Business Development, and the National Check Image Archive Service in the Boston Check Operation. Marianne has an MBA from Babson College. Next, we'll have Rob Levy from the Center for Financial Services Innovation. Mr. Levy spearheads the CFSI's strategy for researching, promoting, and evaluating the impact around its key innovation areas: prepaid cards, savings, consumer credit, mobile banking, and financial capacity. Prior to joining CFSI, Mr. Levy opened and operated the Washington office for a national nonprofit advocacy organization. In this role, he oversaw all political and legislative strategy for the organization, researched and authored policy statements and talking points, and developed strong relationships with both congressional staff and grassroots activists. Mr. Levy holds an MBA from Yale School of Management and a BA and BAS from the University of Pennsylvania. And last, we'll have Michelle Junn from Consumer Union, which is a policy and advocacy arm of Consumer Reports. She works primarily on payments, including prepaid cards, gift cards, payroll cards, and mobile payments. She is often consulted by policymakers at the state and federal levels and by the media. Ms. Junn has authored legal and public policy strategies on mobile payments, which can be viewed on the research page after the completion of this webinar. She holds a JD from the University of San Francisco and a BA in History from the University of California at Los Angeles. Please visit our research page for additional materials and copies of today's presentations, as well as an audio recording of today's webinar and a transcript. Also, we just hope that you complete the survey that will show up as you exit the webinar. If you have any questions following this presentation, please contact Karen Harris at 312-443-8474 or by email at karenharris@povertylaw.org. Before we begin, I'd like to start out with a quick poll. So we just want to get a sense of who our audience is. So if everyone could answer the question, I am a 1, banker or in the financial industry, 2, in the mobile phone industry, 3, an advocate, 4, a consumer, or 5, other. We'll give you a little bit of time to fill out the survey and see who's with us this afternoon. Looks like we have a pretty good balance of the banking, financial industry, and advocates, and some other folks joining us as well. So thank you all so much for being here. We hope you enjoy this webinar. Just a bit of background about the Sargent Shriver Center. The Sargent Shriver Center on Poverty Law provides national leadership in advancing laws and policies that secure justice to improve the lives and opportunities of people living in poverty. The Shriver Center achieves its mission through 3 interconnected programs: advocacy, communications, and training. We advocate for and serve clients directly while also building the capacity of the nation's equal justice providers to advance justice and opportunity for their clients. The Asset Opportunity Unit takes action against poverty by advocating for policies that expand asset building opportunities for all. So now we've talked a little bit about the organization, and now we want to dive a little deeper into some definitions that are going to be helpful in today's presentation. So we're talking about the connection between the unbanked and mobile banking. So just to clarify, that unbanked population are those U.S. consumers without a checking account or savings account. And the unbanked population are adults or anyone without a financial service product such as checking or savings account. And also the unbanked population tends to have other financial services such as prepaid cards. And when we talk about mobile banking, which our panelists will get into in more detail later, but we're talking about account transactions, payments, and credit applications, and other banking transactions through a mobile device. And just a bit about statistics. You can see here that an estimated 70% of Americans are banked, while 17.9% are underbanked, and 7.7% are unbanked. Mobile banking was first introduced in developing countries as a way to provide banking services to communities that lacked formal banking institutions or infrastructure, and has recently gained prominence in the United States. While the U.S. has sufficient banking infrastructure, many low-income Americans remain unbanked and underbanked. Our panelists are here to explain what mobile banking is and how it can be used to provide low-income and unbanked populations access to mainstream financial services across the country. They will review banks' outreach efforts, discuss recent developments in the field, as well as consumer protections and regulations related to mobile banking. We will also go over some of the reasons why people might be afraid or apprehensive to use mobile banking. The biggest reasons are that people think they no longer need it, the maintaining a balance is not affordable, and they have to travel too far to use a bank. Also, be sure to check out our recent Clearinghouse Review article that has a more in-depth look at mobile banking. So that's it for the overview, and now I'd like to have one more poll, and then I will introduce our first panelist. So if everyone could fill out the survey. I have used my mobile phone to check my bank account balance, make a payment, transfer funds, or all of the above, or none of the above. So it's looking like over half of the audience has used their phone to check their balance and also transfer funds. Those seem like popular choices. And it looks like 39% have made a payment and 35% have not used their mobile phone to bank. Thank you for your participation on that. And I'd like to introduce Marianne from the Federal Reserve Bank in Boston.
Thank you, Allie. Just getting set up here. want to get the full screen up so everybody can see that. Okay, so thank you for having me this afternoon. And what I'm going to do in my session is to focus more on the general mobile payments landscape in the United States, talk about what's going on in the industry, and what some of the services are that are being developed. And just looking at the poll we just saw that you took, you're probably at a higher percentage of what most people are in terms of doing mobile banking or payments activities. So that's interesting. So as I said, I'll go an overview, talk about some of the opportunities and challenges and where this is going in the future. Now, Allie just went over the mobile banking definition, so I won't go over that again. But just to distinguish, there is a difference from our perspective on what mobile banking is compared to mobile payments. And we differentiate by just saying mobile payments are made usually at the point of sale or at the internet for goods and services or digital content, perhaps at transit, even P2P. But the distinction I make is that they're not usually made through your bank. They're done independently of a bank transaction. And another term that I will use a few times during the presentation is contactless or near-field communication, which, if you're familiar with it on cards, debit or credit cards, it's a communication protocol that allows contactless transactions and exchanging data wirelessly, for example, between a mobile phone and the merchant terminal in very close proximity, within less than half an inch, in order to make payments. And I will talk about some of the businesses that are using NFC technology for mobile payments as we go forward. So just at a high level, what are some of the trends in the United States right now related to mobile payments? Well, we are seeing that consumers are making more mobile payments through the internet and remotely, and to some extent starting to do it at point of sale. And we don't have a lot of statistics and data in the United States to measure that yet, because even though it's growing, the volume is still small. So we look at other things to get a sense of it. And for example, PayPal mobile, just their mobile payment volume grew 500% from 2010 to 2011 in quite a bit of money there, although remember there's still a small percentage of overall retail payments. And looking at just some of the mobile shopping searches that people have used Google for, grew 220% in that same time period. So while these are drivers I would look at as driving mobile payments. So as they grow, we expect mobile payment transactions to actually increase as well. So another driver is they're driven by the increase in the number of smartphones, more available mobile applications, particularly for payment or financial applications, and incentives that are being offered by retailers and other mobile providers for coupons, discounts, and rewards, using them through your phone, receiving them from your phone. That's helping to drive this as well. Another big trend, though, is that we're not seeing things happening in mobile payments in a silo. We're seeing a convergence of using the online, the mobile channel, and the point-of-sale channels, perhaps for one transaction. I might go online and do some research on something I want to buy. I might use my mobile phone to get other information. I might go physically to the store to look at it, and then I might still pay for it through my mobile phone or some other combination. But as this world is evolving, we're seeing these things combined. We're seeing more information about mobile wallets. I'm going to talk about that a little bit more later. And then EMV, which really is a chip and pin kind of security that's been very common in Europe and other countries and has not been something that's talked about here until the past year as a security tool, first for cards, but we're starting to see some reason for using it within the mobile phone. That's also growing and starting to be accepted as something we need to do in this country for mobile payments. The non-banks are becoming very active in this space. Google, PayPal, the others are listed here, as well as the mobile carriers. And that's a concern, is an opportunity and a concern in the sense that they're not banks, but perhaps they're filling some gaps for the underserved and others that maybe the banks aren't doing right now. And then there are some new technologies competing with what's been looked at recently. The cloud is another mobile technology, along with that contactless NFC that I mentioned earlier. So I think we can safely say that the use of a mobile phone related to payments in this country is not, we can't consider it a fad anymore. And while it's still considered a nascent business, there is a lot of activity going on. This chart is showing that smartphone adoption continues to grow, and it's including not only new mobile phone subscribers, but also the feature phone subscribers are converting over to new smartphones as they get new phones. And the increase in the number of people switching just from feature phones to smartphones is a clear driver for mobile payments, because without a smartphone, a consumer is very limited in being able to actively use or take advantage of mobile payments and the other services that go along with it. You can't really download an application. You can't use a barcode. You certainly can't use the NFC contactless technology or get the coupons and discounts for the most part, so, or even use the wallet down the road. So we see this as another driver. And we can see on the slide on the right that the market share mix is still the Android, which is the Google operating system, is still driving the business. The Apple iPhone's not far behind, but obviously there are many more phones that people can use with the Android Google operating system, and that's probably why it's the bigger one. But again, this changes, and this group increases every quarter when these numbers come out as well. So just quickly looking at some comparisons between the underbanked and the unbanked, and I think Rob's going to talk more about this in his presentation, but this is a survey that was done by the Federal Reserve Board of Governors. There's the people at the system level in January, and they published a report in March, and was focused on mobile banking and payments broadly, but they had statistics around the underbanked and the unbanked. And the interesting thing to point out really is that the underbanked and the unbanked have more smartphones and mobile phones, particularly the underbanked, than the average consumer, and that they use them more for mobile banking and mobile payments than the average consumer. So again, an indication telling us that there's a need for this, and if we can provide the right services, there's a good opportunity for the underbanked. This next slide is just something to show the evolution of how we think mobile banking and payments has evolved in this country, beginning with following the path with online banking, which people developed a comfort and experience with that enabled them to feel comfortable buying things on the internet, pre-mobile banking. But that sort of set the path for people to try out mobile banking as the individual banks who they were familiar with, who they had relationships with, offered mobile banking services. And the banks started by offering basic services first, the non-transactional, so checking your balances, checking your last transaction, the things that showed on the earlier poll that most people do. And that was a way to get people comfortable using their mobile phones to use these things, and most banks started with that. And then quickly added, particularly the larger banks, added the advanced mobile transactions, the ability to do transfers between accounts, P2P is evolving more now, and then more recently remote mobile deposit capture. So again, added complexity, but still within the banking framework, the relationship of the bank and the consumer. And then we're starting to see outside of the bank being able to do mobile payments as we move up this pyramid. Recently with bridge technologies, because contactless is not widely available really in this country yet with NFC, and the wallet, but they're being developed, they're being tested. And so that's just the evolution of how we're seeing it go in this country. Some of the mobile banking functions offered by big banks are listed here, and as you see, the 100% of most of the monitoring types of transactions are offered by the larger banks. And this is a survey of the top 20 to 25 banks in the country. But the ones that are highlighted are, I would think, of particular interest to an underserved consumer. Things like being able to do P2P transfers, the fact that some of the banks now offer bilingual mobile access, and this survey year before, that number was much lower in terms of bilingual. Being able to deposit your checks remotely if you have them is something that would be helpful. And the last two, if you look at it, open accounts over the phone or enroll using a phone at 4% and 0%, extremely low, something that yet perhaps needs to grow in order to serve people who don't have bank accounts or checking accounts. It might help, or who can't get to banks. So these are things that we just kind of want to keep an eye on to see who's offering them and if they're helpful. A little more background quickly on mobile remote deposit capture, the ability to use your phone with a camera to take a picture of a paper check and send it electronically to your bank to deposit it, which means you don't have to go in person. You usually get immediately availability, and this has been targeted to consumers and small businesses primarily, We're seeing more banks begin to offer this, and we're also seeing some non-banks like PayPal and Plastique looking at doing this. We need to make sure that there are good fraud controls in place for it, though, that it's encrypted, that in terms of potential consumer fraud, that there are limits on the daily amounts deposited. KYC, know your customer, is critical for doing this, but the banks seem to have a good handle on it from what we've seen so far, and as they offer it, it seems to be growing in popularity. Mobile person-to-person transactions, too, is another one that in the past year or so we've seen much more activity with the banks. When you think about that, something PayPal's been doing for years. If you had a PayPal account, banks are getting more involved in this either on their own or partnering with other banks, or in some cases even partnering with non-banks, so that for small dollar things that perhaps we were paying with cash or check or money orders, the opportunity to transfer money less costly than an expensive wire or having to go to Western Union or something, there are opportunities coming up to use mobile P2P for everybody. Again, it needs to be monitored for risks such as money laundering and the KYC, but it's an opportunity for everyone. This chart's showing some of the mobile payment opportunities that can apply across the different technology platforms, whether you're using your web browser or an application. In the remote side, meaning that your payment transaction, you're not physically at the store or the point of sale making a transaction, so that would be considered remote, as opposed to proximity, where I'm in the store making a payment using contactless or a barcode application or something like that. But if you see, there are lots of services that can be of value to consumers of different consumer segments as well as merchants in terms of whether they're on the internet or ticketing from the remote side, buying things of small value in stores or at quick service restaurants, vending machines, and certainly in the transportation world, we're already seeing machines within taxis equipped to handle some mobile payment transactions with contactless technology, parking, downloading applications to remotely pay for a parking space, and public transit across this country, which is a big area that could probably help move mobile payments along. We're starting to see in different regions taking advantage of mobile technology and contactless technology. And they all, in order to incent the consumer, are using loyalty and reward programs. They're looking at location-based services and also are trying to make sure that the security and the ability to monitor these payments is built into the process. But that's something that also needs work. So this, just if you think about the wallet that I'm going to talk about a little bit more detail in a second, the mobile wallet of the future. So take your physical wallet and think about putting all of the things in your physical wallet, your checks, which would be your bank account information, credit and debit card credentials, cash, electronically, as well as other things you might have like loyalty cards or perhaps your iTunes account or a merchant application like Starbucks. Being able to put all of those into your virtual wallet in your phone and then select from that virtual wallet when you want to pay for something depending on where you are and what you're purchasing. And that's what we're calling the mobile wallet. It is stored in a secure element in the mobile phone, which is the box on the right. It's an encrypted chip in the phone, and it's protecting the credentials. There's a whole complicated process to get this information in there. But that's the direction this is going in one area as far as building a mobile payment access. It can also include prepaid accounts. So for the underserved, there's opportunity there as well. The next two slides, I'm just going to go over very briefly, but I'm just showing you some of the major wallet initiatives. You may have read or heard about them in the news that are just starting to come into production, and where everybody's kind of watching to see how well they're going to work. They're using some of the same technology, some different technologies. Google and ISIS are both being built on what the near-field communication contactless technology is with their wallets. They're working with different mobile carriers, which is an issue because long-term we want interoperability and accessibility for everybody. And right now, none of these are really truly interoperable. But I think we have to give them time to work out the kinks and see how they're going to get the, how they're going to work before they can spread it more broadly. But you can look at this and see what's going on. Even PayPal's getting involved to some perspective in the retail at a store. On the next slide, we've got some other of the major disruptors in this space. Square, which started off really allowing small, really small merchants to be able to accept credit and debit card payments with this plug-in device that Square offered. They have lots of competitors now, including PayPal, and they've also started looking at offering, being able to have consumers come into a store using Square to pay as well. Apple is sort of the big question mark right now, given the huge volume of accounts they have through iTunes and people who have iPhones and the sophistication of their applications. There's expectation that they're going to get into this space. Right now, they've just come out with an application called Passbook. It doesn't involve payments, but it involves things that support payments. That it allows you to aggregate different loyalty and barcode applications in this Apple iTunes Passbook wallet to be able to access when you're making payments, but they haven't really crossed over to the payments line yet. However, that's a huge disruptor depending what happens down the road if they really get involved in it. Starbucks, I'm sure many of you are familiar with, be able to use your barcode application on a phone. They're growing, but they're also a closed system. And then the last one, which probably is more concern, is this direct carrier biller, allowing you, right now in the United States, it's primarily on the intranet. If it's offered, I might want to buy a ringtone or a subscription, something of digital content online, and I would use this intermediary, one of these companies listed here, and then that purchase would be billed to my mobile phone bill directly. It doesn't go through the bank, so it doesn't have the same protections and things, and Michelle's probably going to talk about this, so I won't go into it, but that's another one that we need to look at. So the industry has some challenges in moving mobile payments ahead, as you can see from here, and some of them are being addressed now. A lot of the partnerships are trying to address some of the business models. There are more phones being produced that are NFC contactless enabled. A lot of the coupons and discounts, there are attempts to try to build consumer demand and create the value proposition. But we still have issues with standards and interoperability, security and privacy to continue to be an area that we've got to do more work in, along with other things. And what the group that I work with in the industry, we've been meeting for a couple of years, and we put together a list of principles that we think are needed for successful adoption in this country. And I've talked about the first three, using the phone, the wallet, and the NFC technology, but we also are saying that we think the payments should at least initially be cleared and settled over existing banking and payments channels that are tried and trusted and have been around for years and safe, relatively speaking. We want to make sure that there's a baseline for security using what we call dynamic data authentication to encrypt a transaction and make sure, and it's a one-time transaction that's going from the mobile phone being processed as a payment, so that a fraudster, even if they were able to steal your credentials from that transaction, they're only good for one time, and so they're no good to the fraudster. You can't skim or clone based on using that. So we want some, standards developed around security and standards developed around the whole process that need to be worked on. Clearly, regulatory clarity is still something that needs to be addressed. And then this trusted service manager is an oversight. Think of it as a middleman or coordinator that makes sure your payment credentials are being set up safely in a mobile wallet and being handled properly. And that's an area that also is working towards being developed to support the mobile wallet. Security, we're saying these circles are all what we consider sort of key points of potential failure or risk in the environment. As you can see, there are so many, which is what complicates the mobile payments process. They're physical, they're software, there are customer issues, the security of the transaction, many providers involved. So we need to look at security around mobile payments holistically. We need to work on it collaboratively. It's a shared responsibility, not only from the providers. It's something that the consumers have to also share in the responsibility of doing. And in the regulatory landscape, right now, there's no one specific agency or law governing all mobile payments, and so that's something that's being looked at. Should we do that? Do we need to do it? We've got banking regulators, and now we've introduced non-banking regulators like the FTC and the Federal Communications Commission and the state regulators. So a lot of people have to get together, and we've been talking to them, trying to understand what their issues are, what the issues are from the industry side. So at least there's a dialogue going on. And for now, the general consensus is that, well, we need to do some things. It's probably too early to do anything that's really major in terms of regulation, but we should continue to communicate and focus on education between the groups. So finally, there are a lot of benefits to mobile payments for all consumer segments, but there are also some risks and issues that have to be addressed, and those have to continue to be looked at. We think that non-banks are going to continue to play strong roles in innovation and implementation of these services, along with the banks and other financial institutions, but the security and fraud could potentially hold it back if we don't work collaboratively to address some of these issues and educate everybody, make sure we know what we're doing, and that there are still lots of opportunities out there to develop the tools and the technology, but we probably need more incentives to incent everybody to address these things. So that's my section for now, so thank you. I'll turn it back to Allie.
Great. Thank you so much, Marianne. That was really helpful research and information. So to go off of one thing you talked about, so we just want to see what the audience's comfortability and familiarity with the tap and pay or NFC technology that Marianne talked about. So another poll is going to pop up. If you could answer the question, my phone has the ability to tap and pay or is enabled with near field communication technology or NFC. So if you could answer yes, no, I don't know, or I don't know what that is. So as Marianne said, it's a somewhat newer technology, but could take off in the future. So a lot of people, looking like almost 40% don't know if their phone has it. About 18 or so percent said yes, their phone does have it. But it seems like the majority don't know or their phone doesn't have it. So this just goes to show that like Marianne said, it is a new technology. All the consumers that have iPhones, they don't have this technology yet. Some Android and Google phones do. So it's new and up and coming, so something to look out for in the future. So thank you for your participation on that. And next we will introduce Rob Levy of the Center for Financial Services Innovation. So I'm going to pass it over to you.
Thanks, Allie, and thank you so much for having me. So the presentation today I'm going to give is going to be focused. It's going to really be a nice jumping off point from Marianne's presentation and look more specifically at the opportunities for mobile financial services to benefit underbanked consumers. Next slide. So just to give 1 minute on CFSI, we are a nonprofit organization. Our mission is to transform the U.S. financial services marketplace to help underserved consumers achieve financial prosperity. So it's really sort of a market-based theory of social change. And we do that in 4 main ways. We inform the marketplace through research on the industry and consumers. We advise companies and have lead dialogues. We invest in innovative startups, both nonprofit and for-profit, and we advocate, inform, and influence federal policy. Next slide. So we did a bunch of research about a year ago to really understand what the opportunity would be for mobile financial services to benefit underserved consumers. And we think there are a lot, and I think Marianne's presentation sort of showed some of that starting to come to light. And we also think there's some real benefits for new revenue streams for providers that are going to offer these services and to enhance the customer loyalty to their existing customers, So we'll start off with the 3 facts that underlie this analysis. The first is that many American consumers are currently underserved by the existing financial services system. Most on this call are probably familiar with some of this, and Ali mentioned these things in the beginning. I want to just make sure to clarify our definitions. So unbanked, and see if, as I talked about, it means has no checking or savings account. Underbanked means they do have a checking or savings account, but yet they still rely on a series of alternative financial products, such as payday loans, check cashing, etc., to meet their financial needs. So, I mean, you here have almost a quarter of the country that is essentially underserved, and then you have this real opportunity to benefit them and get them new services or better services through the phone. We also are seeing that underbanked consumers are using mobile phones and mobile financial services in greater numbers than the general population. Marianne showed some of these same stats for both using the Fed study, which is so fantastic, what I'll give is a little thinking in there, analysis to why we suspect that underbanked consumers are using these products, is that for many of these consumers, this is really a high priority purchase. To have a smartphone really matters to underbanked consumers, almost more so than the overall population, which you might think is surprising because we know underbanked consumers are more strapped in terms of their finances. But these consumers are less likely to have internet access at home or to have a computer at home. If they're an immigrant population, their phone is their main source of connection to their family living back home abroad. And and especially because underbanked are also more likely to be young, we know that the youth market are heavy adopters of these kinds of technologies. So for all these reasons, we see underbanked consumers more so than even their overall population using smartphones and mobile banking, which means there could be this real opportunity to use that access to them to get them better services. And then the third fact is that these phones are deeply functional. Not only do you have the computational and connectivity capabilities of basic online services and web services, but you have GPS, you have the camera, you have just the fact that it's with you all the time and portable. And this opens up all kinds of new doors. Let me go to the next slide. CFSI identified 5 major benefits to think about how MFS could benefit underbanked consumers. And we grouped it into 2 categories. On the left are essentially those things which could be enacted today, given the existing technology, and some of these we are seeing. And then on the right are sort of what can be enacted tomorrow, the systems that aren't quite in development yet. Of those that can be enacted today, the first is to drive increased financial capability, essentially to improve people's financial behaviors. 2 is to offer greater convenience, to save money, to help them do things on the go. 3 is to lead to improved security and fraud protection because of some of the functionality of these phones. I'm going to talk about all these in greater detail in a minute. 4, that we could help transition customers from using cash to doing electronic transactions. And 5, and this is sort of the holy grail of financial services, that we'd actually improve access to basic financial accounts, especially for those who are unbanked. And I think a lot of us in the financial inclusion world have been incredibly inspired by what's happened abroad in places like Ghana and Kenya, Uganda, where millions of people have entered the financial system because of mobile banking there, and they sort of leapfrog the whole type of technology barrier. And so the question in our minds is, can mobile do that for underserved consumers here in the United States? Next slide. This is another way of looking at that breakdown, just to think about differently in terms of the functionality of the phone. Informational services is just basically the display of information. Transactional services is moving money around. Doesn't necessarily mean it's often within a bank or between different bank accounts, and you could think about it as this being something you could probably do on online banking, but now you're just doing on your phone. And then finally, payments, which is actually making a transaction on the go. And then you can see the different principles that have applied to that framework. There's another way to think about it. Next slide. So let's get into it, because this stuff is really exciting. And of all the things I'm going to talk about today, honestly, financial capability is the most present and available opportunity for mobile to help underserved consumers. And it still amazes me and us how few of these services we're seeing financial institutions offer and the non-banks offer, and I think there's still a long way to go. And this is just basically providing timely access to account information through alerts and reminders that can empower consumers to spend, borrow, and save better. And I have on this slide just 5 different examples of ones that many of you may use, but surprisingly not everyone is offering yet. Account alerts. So these are just basically getting a text message that's triggered when your account reaches a certain threshold. So say if my checking account gets below $200, I'm going to get a text message to that effect. And we have seen that about 1/3 of mobile banking customers are getting a text alert of this nature. So people are starting to use this more and more. Balance inquiries. So this is where I actually go and request what is my balance. Particularly useful like at the point of sale. Can I afford this? Will this overdraw my accounts? Getting messages or reminders. This can be, maybe I've set a goal that I'm trying to save $1,000, and so I get a message every week saying, hey, you're $50 closer to your goal. Keep saving this week. Keep saving this month. You can get alerts that you have a bill due, and this can be really helpful for underserved consumers who are on the go. Imagine someone working multiple jobs, sitting on a bus to get a text alert saying their bill is due, and in a deeply robust application, you can actually pay the bill right from their phone. That's helping people avoid bill payment, fees for paying their bill late, and really helping them use their time most efficiently. So a lot of advantages there. And then the fifth is an ATM location. Help me find the nearest ATM, or even better, help me find the nearest ATM with the cheapest surcharge, or one that's in my network for my bank or prepaid card. Next slide. So now we've taken some of the recent Fed study and said, okay, so what are our consumers using this, and are particularly the unbanked and underbanked using this? And the Fed has put out a bunch of research, and they've done a particular slice of the research. And of course, the question that looks at underbanked versus banked, and I think this is really, really interesting. The big answer is, are the underbanked using mobile tools? And the answer is yes. I'd point your attention to the second one here, checking account balance. So here we see unbanked, underbanked, banked, all are checking their account balances at really high rates, almost 90%. And also, for those of you who are wondering, how does an unbanked person check an account balance if they, by definition, don't have a bank account? That's because a prepaid card here still counts as being unbanked. So they could be checking the account balance on their prepaid card. Are you paying a bill using your banks online? We see similar results there. What I think is particularly interesting is this fifth one down, transferring money between accounts. Here we see the underbanked, that middle blue bar, at much higher rates, almost like 55% compared to 40%, are transferring money between different accounts. And this is, I think, really interesting because we know that underbanked consumers are more financially challenged, and they're really managing accounts. I've got this account, I got this account, I need to pay this bill with my one account, I need to put a little bit into savings, I need to pay down this debt I owe. And the ability to do that on the go seems to already be an advantage that underbanked consumers are taking advantage of on their mobile phone. And you also see some high numbers in those that are using the mobile phone to locate the closest in-network ATM, almost 30% of underbanked saying that they're doing that. Next slide.
Sorry.
No problem. There we go. So then this is an analysis of those who are getting text alerts. So I mentioned earlier text alerts as being one of the easiest ways to use a mobile phone to help a consumer manage their money better. And of those that are getting text alerts, we see 2/3 are getting that low balance alert that I mentioned. About 1/3 are getting a payment due alert or a fraud alert. We have a very tiny percentage here getting savings reminders. I think there's a lot of more ground that we could be covered using that functionality. Next slide. And perhaps what's most inspiring about these text alerts is that we're actually seeing consumers do something with these text alerts. So what's I think been most promising from a behavioral psychology or behavioral economics perspective with mobile phones is the real-time ability to send information that someone can do something with immediately, which getting an email doesn't even necessarily work that well, or getting a text message before you could actually do anything about it isn't that helpful. But now with the smartphone, I can get a message that I have a low balance, and I can then transfer money into an account that has that low balance. And here we see almost 60% of consumers are saying after they got that text alert, they transferred money into the account with a low balance. 40% are saying it actually impacted the amount that they spend, and 16% are putting cash directly into the account with the low balance. So that's really inspiring to see that these basic text alerts can really help people manage their money better. Next slide. So that was all within the financial capability. Now I want to talk about a few additional benefits of mobile for underserved consumers. The second is that it can offer greater convenience, and there are a number of really useful features on the phone that have particular benefit to underbanked. The ability to add minutes directly to your prepaid cell phone, which Plastique offers on their iBank prepaid card mobile app. The ability to take a remote deposit, it's called mobile remote deposit capture. Essentially take a picture of your check and load it into your account. And Marianne mentioned this, and there's a study that shows that underbanked consumers are actually twice as likely to use this functionality versus all consumers. And this is really great because this essentially could be a bypass for the check cashers, which can take 2 to 3% of a person's check off the top when you go to cash that check. But if you can take a picture of your check at home and wait 2 to 3 days to have it deposited, you can pay no fee for many of these companies. And if you want to have immediate access of those funds, there's different pricing, but it's usually a few dollars, and it's often cheaper than the check cashers. So I think there's a lot of promise there, and there are security risks and fraud risks, of course, but we see growth in that industry, in particular opportunity. Next slide. This slide just looks at some of the advantages for increased security and fraud protection. The first, with potential fraud prevention benefits, that if you have the phone, you can quickly be alerted if there's an unauthorized transaction and immediately put a stop on your credit card or prepaid card, whatever it might be. We've seen some technologies that are authenticating the card through a dynamic PIN code. So essentially, each time you would use your credit card or prepaid card, you'd actually have a number that's sent to your phone to authorize it that this is you and you prove it's you. Or that the account number even itself changes all the time. So all these things would prevent someone's card from being stolen or misused. And then we just have so much depth by the consumer. You can take number one and compile it with at someone's GPS location. You can confirm if that person is where they say they are. You can confirm. You can look at their friends and family and their contacts and use that as ways to verify information about them to ensure that the person who's making the payment is the person who they claims to be. And with these tools, you can increase the trust between both the provider and the customer. Next slide. So now we're getting a little more forward-thinking into the world of mobile payments and the way that we can really transition these customers from cash to electronic payments. So most of us on the phone probably have some kind of bank account, although I don't know for sure. But for those who are cash users, they, for many reasons, really enjoy cash, and they enjoy the safety and security of it, or at least the simplicity of it. But there are a lot of benefits to moving to electronic payments, which can be, a safety issue when you don't have to carry around $1,000 in cash after payday, that you can just pay with the card wherever you are. You're not worried about what cash is in my wallet or not, and then you can have cost savings by avoiding the check casher. So these are all sort of benefits, but it can be actually really hard to convince the consumer to make that transition. And the idea here is that if there's enough of a value proposition of these mobile payments and functionality, that you can really convince someone to make that switch and say, okay, I'm going to get my PayPal account, or I'm going to get a prepaid card so that I can make a payment. I'm going to use Square and set myself up on Square. And with transit, there's another opportunity where we're starting to see, like in Chicago, they're doing this where, the transit cards that you're going to use are going to have prepaid card functionality built into it. So if you want to use that card as an actual prepaid card and then connect that to your phone, you're actually getting people in, starting to make small transactions electronically rather than using cash. Next slide. And we also see that underbanked do see value in mobile payments. So I'm going to read this slide backwards, actually. This, again, comes from the Fed study. And I thought this was really interesting because the Fed asked, what are the main reasons why you're not using mobile payments? And in several of these categories, we see the unbanked and underbanked having less concerns about mobile payments than the banked. And again, this could be because they see a greater value in it, or because they're more tech savvy, whatever it is. But looking at this first one, are you concerned about security? Unbanked and underbanked, a little bit less concerned about security risks than the banked. Do you find it easier to pay with a mobile payment? Well, that says, is it easier to pay with other forms of payments? And here we see unbanked said, no, I'm actually not that concerned. Actually, I think it might be easier to pay with mobile payments. Some people say they don't see any benefit, but we see unbanked and underbanked much less likely to say they don't see any benefit in mobile payments. So this is several points along this graph. I think it suggests that the unbanked and underbanked are really ready for mobile payments once the technology gets to the level of scale and network availability that Marion was discussing. Next slide. And finally, the sort of holy grail, as I was mentioning, is can mobile payments be, and mobile financial services generally, be a bridge to getting particularly that unbanked population into financial services, whether it's a prepaid card or a checking account or a credit card account, and get them having an account and starting to build savings and get better access. The verdict is very much still out on this. I think whether or not it's going to have the same impact here as it has abroad. Certainly we have a much more developed financial system, so the analogy is not perfect. But we do see that despite the incredible growth of particular prepaid over the last 5 years, only 12% of unbanked households and 16% of underbanked households are using a general purpose reloadable prepaid card. So if we could actually see consumers, say, sign up for the prepaid card directly on their phone, which I know Plastique right now offers, and some of the other bigger prepaid card companies are starting to offer, and immediately get that prepaid card. And if you could start making mobile payments from your phone without even having to wait for that card to be sent in the mail, that could really be an on-ramp to financial access that didn't previously exist. Of course, there are many security and regulatory concerns there, which I'm sure Michelle will discuss, but I think the opportunity is real. And I also threw in Whippet and PayPal, because it might not just be prepaid debit cards here, but it could be Whippet, which is basically a mobile payments, kind of like a wallet, you might call it, right on the phone. You don't even necessarily need the prepaid card. And PayPal, as we know, is a deeply functional service. They do have a prepaid card, and they're doing all kinds of really interesting work in this space as well. They're growing hugely in mobile and looking at the underserved consumer in particular. Next slide. So to wrap up, I want to just say that there are lots of new ideas coming out about how mobile services can be used for underserved. And there's actually a really exciting challenge that's just wrapping up right now called the My Money App Up Challenge. And the Department of Treasury partners with CFSI and another great organization called D2D Fund. And we've solicited the best ideas for new apps that will help consumers improve their financial capability and improve their financial access. Unfortunately, it's a little too late to apply, but if you check the link out here on your screen, mymoneyappup.challenge.gov, you can see the different designs that were submitted. We're actually in the judging process right now, and I think next week or the week after we'll be announcing the winners, and there's a $10,000 prize. But there is a lot. This is just another way of saying there's a lot of excitement around how mobile can be used to help underserved consumers, and we're hoping that more ideas and innovations are coming down the road. So that's all. I look forward to taking your questions later on. Thanks so much.
Great, and thank you, Rob. So just a final poll before we introduce our last speaker. We've heard a lot about all the new exciting innovations available, but we want to know maybe the main reason that you are worried about using mobile banking on your phone, or maybe have heard these fears. One is, I'm afraid my money isn't safe. 2, my phone doesn't have technology. 3, I'm worried about fraud. 4, I didn't know what it was. Or 5, I do use it. Just to give a sense. So it seems like well over half of you are using your phones to do some sort of mobile banking, mobile payment transactions, which is great. So we hope this information was useful for you. Seems like 15% are worried about fraud, 14% your phone doesn't have the technology, and about 12% thought that their money wasn't safe. So that's going to be a really good transition to hear from Michelle from Consumer Union. And she's going to talk to us about some of the consumer protections that are in place or need to be in place in order for this to be useful for consumers and also the unbanked population. So Michelle, take it away.
Thanks, everyone. I have the distinct pleasure of being the last presenter during the lunch hour this one, I'm sure, so thanks for sticking around to listen. So there's been a lot of fervor about mobile payments and the impact on all consumers, but particularly on low to moderate income populations for the reasons that both Marianne and Bob had highlighted. But my job is to make sure that consumer protections are placed at the conversation front and center, to make sure that consumers know what will happen in the event that something goes wrong. So this presentation will broadly address questions that consumers should keep in mind when they go into adopting different forms of mobile payments, and provides a high-level view of current existing consumer protections and payments one of the questions that consumers should keep in mind. So with the different mobile payments that are coming about, it could be a very good experience for consumers, and we believe that they always should be. And in doing that, consumers should keep in mind, one, what should happen if something goes wrong. Two, two, how hard is it to fix the problem? And three, will I lose my money? So the first question, what happens if something goes wrong? Well, obviously with cash, the answer is very simple. If your cash went missing, then it was simply gone. But with the advent of electronic payments and, of course, with mobile payments, the answer is not always straightforward, and it's certainly not uniform amongst the different payment methods that can be attached to it. So consumers should ask what would happen if they find an error on a statement, or what would happen if the payment device, in this case the mobile phone, is lost or stolen. And then how hard is it to fix the problem? If the consumer finds a mistake, say on their statement, or if they obtain an alert that they hadn't made, what does he or she do to resolve the problem? So for instance, if our hypothetical consumer, Joe, found that she got an alert that she paid twice for a cup of coffee using her mobile phone, who does she contact? Does she contact her bank? Does she contact the issuer of the bank card? Does she contact the wireless company? And exactly what are her rights? And the last question, of course, the most important one is, will she lose her money? Will Joe lose everything? It may not be as significant of an impact if it's just a $3 cup of coffee. Let's say it happens over and over again. Will she have the money to pay the rent at the end of the month? And will she have any resolution in getting her money back? And what happens if her account is simply hacked and all of her money is gone missing?
Michelle?
Yes?
We're getting some feedback that we can't hear you very clearly. If you could maybe get closer to the mic or something. Sorry about that.
I know that we were having some mic problems earlier. Can you hear me better now? Maybe I should just keep talking and let me know if you can't hear me.
Okay.
So
hey, that's a little better.
Is it a little better? I know the tech systems here not really working. So the first question is, what could go wrong? We're looking at fraud and loss, unauthorized transactions, excessive fees, and notice and disclosures. Are consumers being provided all of these different ways to resolve the problem, and are they alerted ahead of time in case there is something that goes wrong? So in order to do this, we need to look at where the money is coming from, or how the payment is made, in order to determine what types of existing protections a consumer may have when using a mobile payment. So where is the money? Simply, it's follow the money. In order to answer those questions and to find out what happens to Joe, we need to follow the payment method. Or to look at the various payment methods, I've broken them down to pay now, pay later, and pay in advance. So with pay now, or oftentimes we'll think of the debit card, there are protections that are provided at the federal level, which is under the EFTA, or the Federal Funds, the Electronic Funds Act, and the implementing Regulation E. And in this case, time is money. So the alerts are great with the mobile phone, and they will be very useful to make sure that liability is capped. So for instance, if a consumer finds that a mobile phone is lost or stolen, if they make a report right away, their liability will be capped at $50 if the report is made within 2 business days. But then it goes up to $500 if it's made beyond that. And say if the error is found on a statement, they have 60 days to report that error, and if that doesn't happen, then their liability will increase greatly. And of course, perhaps what would be the most important would be right of credit, particularly would apply to debit cards that are attached to bank accounts, and hopefully soon to prepaid accounts, where a issuing bank would have to refund the missing money within 10 business days, regardless of whether or not an investigation has concluded. And this is particularly important to the group of people who need the missing funds to pay for rent, or to buy groceries, or to pay utility bills. Like I said, prepaid is not quite covered yet, But what we do have in the interim is the Department of Treasury's interim rule. And this is particularly important for consumers who obtain federal benefits. And in order to have those federal benefits sent over to a prepaid card, and this is relevant in that many prepaid cards may be going the mobile route, they must be in compliance with Regulation E, or the different protections that I just outlined, and that they have no credit features, so people can't end up in a cycle of debt, and they are FDIC insurance, so to make sure that in case there's a bank failure, that their funds will be secure. So the second protections that I'll review are the pay later protections, or this is the credit card protections. That's covered by the Truth in Lending Act and are implemented by Regulation Z. Liability is capped up to $50, and there isn't as much of a time frame, although you should make the report within 60 days. And there are chargeback rights, which give consumers the right to withhold payment. So if Joe ordered a red couch and she got a green couch instead, she can withhold payment. She doesn't have to pay, and with both the merchant to try to correct it, and if not, her credit card issuing bank would step in and make it whole. So finally, we are at Pay in Advance, which is prepaid, and there's a wide variety of prepaid cards. The first one I want to talk about are gift cards, and those are covered at the state level, but there's also the gift card provisions of the Federal Credit Card Act. So there are limits in fees, and the fees cannot be assessed on gift cards until there's at least 12 months of inactivity. So if the consumer didn't use that gift card in 1 year, on that 13th month, one monthly fee can be assessed until all the funds go down, or the consumer realizes it and uses the gift card funds. And the funds cannot expire less than 5 years from when they were added. So if a consumer had a card and loaded more funds onto a gift card, say a Starbucks gift card, those funds cannot expire for at least 5 years. And again, this there are stronger protections under state laws. There are variations from state to state. For instance, in California, there are no fees whatsoever, and there are no expiration dates. And then moving on to general purpose reloadable cards, which are often referred to just simply as prepaid cards. They are mostly subject to the terms and conditions of the prepaid card issuer, but for the most part, they are Reg E compliant, which basically gives consumers the same or similar protections as those provided to debit cards type of bank accounts, with small exceptions. And one more thing to note is that they are currently under review by the CFPB, and we hope that at some point very soon that they will finally be granted guaranteed protections of debit cards. And then we move on to the newer ways to pay, and Mary Ann touched upon this a little bit. This is direct-to-carrier billing. And what exactly is that? Well, consumers will be able to make purchases that are billed directly to their wireless accounts, whether it's prepaid or postpaid. This is currently limited to digital goods, and consumers will probably encounter this most if they're gamers. So if they're gaming online and they're trying to obtain more credits for a game, they may be presented with the option to pay with flow-through or with Facebook credits, in which case they have an agreement with the wireless company to have those payments billed directly to the wireless account. Another example that you may think of is Red Cross donations, so text donations. Those are also billed directly to the account. But we really want to highlight that there aren't any federally guaranteed protections regarding direct-to-carrier billing, and this could be quite a problem if we move into physical goods, as those caps may increase, and therefore the liability may increase for consumers if guaranteed protections aren't in place. There is one law in California currently, the CPUC rule, that provides consumers with chargeback protections, which is particularly important because then consumers will not have to pay for things that they did not pay for or did not intend to pay for. Thereby they could withhold their payments This is important particularly since it is mandated in California, and its conversations from wireless carriers, they have stated that they would extend these same protections to other consumers, although that's not stated in the contracts. Another thing that isn't stated in the contracts is that if the consumer were to make a complaint to the wireless companies, the wireless company will oftentimes waive the first error and encourage them to opt out of third-party billing, which is what direct-to-carrier billing is. But that is not in writing, and we hope that at some point those wireless carriers will make it clear about what types of resolution processes consumers have. And of course, there's the FCC, and they have come out with cramming rules. Cramming is when there are a number of unauthorized transactions that are placed on telephone accounts. The FCC rules only apply to landlines at this point, and we have addressed them in terms of what happens to cramming on wireless accounts. They are looking at the issue currently, and we hope that there will be similar restrictions regarding cramming on wireless. So the second question is then, how hard is it to fix the problem? And of course, the value of rights will differ with the source of where those rights come from, whether or not they're laws or is it by contract or voluntary policy. You can see that with the ease of resolving a problem with a payment depends on these protections. There are voluntary protections that consumers may be able to turn to, and those are the MasterCard and Visa zero liability policies. And of course, there are loopholes that need to be considered. So if a consumer is depending upon the MasterCard or Visa zero liability policy, they do not cover PIN transactions, which means if there's an error made at the ATM, they're not covered under zero liability. Or if there's a PIN purchase made at the point of sale, those will not be covered as well. And with MasterCard, the zero liability policy does not cover them if there are more than 2 reports made in the previous 12 months. And the CTIA, which is an industry association, set out its best practices and guidelines for mobile financial services. And it provides guidance to mobile financial service providers that sets liability caps and usage caps. So essentially the types of caps that you would see applied to debit and credit. And then on top of that are usage caps that are recommended, which many of the wireless companies set on their own, so that consumers won't be able to make more than, say, $50 in digital goods on their wireless bills. And for them to comply with their liability caps required and reasonable dispute resolution processes. But the big problem here is that these do not apply to the wireless companies themselves. So how hard is it to fix the problem? I just wanted to briefly touch on the number of players that are out there. Instead of just having the consumer and a bank and the merchant, we then have the trusted service managers, the processors, the developers, the card network associations. There are a lot of people involved, and there's a lot of finger pointing that could happen. And we want to make sure that consumers are provided a way to resolve their error in a straightforward manner. And of course, then there are numerous payment methods with different levels of protections that I just outlined. So it'll be a great exercise in collaboration between these varieties of players and the agencies at the federal level. And then the last point is my money safe? And it applies to funds that are held in the bank. This refers to the FDIC insurance. And I just quickly wanted to touch on this about prepaid cards. We want to make sure that if prepaid cards are in fact used as bank account substitutes, they ensure that all the funds are safe in the account regardless of whether or not the underlying bank fails. And finally, the strongest consumer protections for all. This is just a question, and going through the different statutory and regulatory protections gives us a better understanding of what the value of rights a consumer may have. And these vary, unfortunately, according to the underlying payment method. So given that credit cards have the strongest protections but aren't necessarily the most widely used method of payment, and of course are not readily available or desirable for all consumers, this could be seen as problematic. And with debit cards, they're the next tier of protection, and the ability to resolve a problem depends highly upon the timing of when a consumer makes a report. But we want to make sure that consumers have a more uniform way to report an error and to obtain quick resolution regardless of what the underlying payment method is. And so if you have any questions or comments, please feel free to obviously ask them here or to send me a message later on. Thank you.
Great. Thank you so much, Michelle. And sorry about the technical problems there. Thank you all for sticking with us. So if you have additional questions, please enter them into the chat box. We have some questions already queued up. And also just a reminder, you will be getting an email with a recording of the webinar and the slides. You can refer back to those later. So I'm just going to get started on the questions. First is for Marianne, or if anyone else also wants to jump in. The stats that you talked about for smartphone use, are those just out of total cell phone owners or total population?
I think those stats are from total population of mobile phone subscribers. So if you're a phone subscriber, the percentage that use cell phones, the percentage you use smartphones.
Okay, great. Thank you. And someone else asked, what do you think of recent efforts by multiple companies, Target, etc., to set up their own joint mobile payment systems?
Is that for me?
Sure.
Well, I think there is a lot of activity going on right now in groups. So I think on the positive side, some of the organizations, the merchants, and in some cases the banks, are at least collaborating with each other to realize that we're not going to make a lot of progress if they try to do everything individually. However, it's creating some barriers. That there was a recent announcement of a merchant organization that involves Target and Walmart, and they're looking at potentially creating their own network, which would be involving many merchants, hopefully, but if it doesn't involve all the other mobile stakeholders, I think down the road that that's not necessarily a positive thing for accessibility for everybody. But I think it's hard for them to start big in the beginning, and so they have to start with some group to sort of set up their principles, their framework, test out their products and services and how it's going to work. And then I hope that they see down the road that they have to join forces with other organizations. So it's good because it's making progress, but it is a concern because it's not open and interoperable yet.
Rob, do you have a response to this?
Not at the moment.
Okay, thanks. So all the products and services we talked about, we're just wondering if any of this would help people build credit.
I can work on that one.
Yeah, go for it.
I think there's a possibility, but I certainly haven't heard of many options right now. The question of whether or not, particularly like the usage of a prepaid card, can be used for one to build credit is a big if, and no one really knows. There's some studies going on to see if how one spends, your income and your expenses, if that can be predictive of your ability to repay a bill. To repay a loan, which is essentially what credit building is all about. So I think until we answer that question, I don't know that transaction activity on a mobile phone is going to necessarily help someone build their credit. However, there are some pieces more in the financial capability area where I think phones can really help people build their credit. So an example is an online company called Credit Karma, which is a really fantastic company, and they enable you to track your credit score for free, and they give you the score every month, and then they give you all kinds of tips on how you can be building your credit score. Things like not making sure you don't have a balance over 30% of your credit line, and there's a whole host of tips in terms of how someone can help build their credit score, right? So now, and I'm pretty sure Credit Karma also has a mobile app, right? So then can they be sending those text, alerts or mobile apps that using to give information, education to consumers on the go, so that they are doing those kinds of behaviors that will help build their credit score, right? And you could even imagine, right, one of those balance alerts that I mentioned. If your credit card, your Citi or Chase credit card, sent you an alert when you got over 30% of your credit line that said, whether they send it or Credit Karma sends it or whoever sends it, it says you're over 30% of your credit line, but you have another credit card that you could be using that only has 5% of your credit line used, you should use that card. Then that could be really helping someone change their behavior that could be credit building.
Great. Thank you for that answer. So our next question is, are there any developments for transactional mobile banking, for example, between the U.S. and Mexico?
I'll take a first stab. The question, I'm going to answer the question slightly differently, which is just talk about mobile money transfers or mobile money remittances, which is something I neglected to discuss during my presentation. And there are a couple innovative companies that are trying to do this, that essentially once you load money into your mobile wallet or mobile account, it can then be sent to someone else in Mexico or anywhere else where they have access to the system, and then they can get cash out at a retail location, say in Mexico, that would take cash out. And so an example of this is a company called MVIA, which has a mobile app, and they accept cash at a number of different retail locations in the U.S. You load cash onto your MVIA account. I think it's about $25 a year for a membership, and then each send of money is $2. And you send it to another person, I think to their mobile number. And then if they set up an MVIA account and they get the cash off at a retail location. Obviously, having a wide network of retail locations that accept this system for taking the cash off is critical. MVIA is building that out, but that can be, if you're sending multiple money transfers internationally per year, that can be dramatically cheaper than going to Western Union or MoneyGram, which can be $9.99 or some percentage fee of the amount. Let alone the convenience factor of not having to go to the physical Western Union or MoneyGram location and actually being able to do it on your phone on the bus.
Great, thank you. And just a reminder that our last webinar did cover remittances. So if you want to check our website and listen to the recording or look at the slides about more information on remittances, that is available to everyone. We'll just do a few more questions and then we'll start wrapping up. One about the Know Your Customer rules and regulations. Are there any applications for using biometrics such as fingerprints to prevent fraud?
This is Mary Ann. I can start. I know that there are vendors, security vendors out there who are developing tools to use biometrics for fraud. At this point, I'm not aware of any regular businesses or providers who are doing mobile payments who have actually implemented those tools for fraud yet. But down the road, I think there's a possibility that those will be included.
Yeah, this is Rob. The only thing that sounds similar to this is actually the new Square Starbucks partnership. Essentially what Square now offers, in addition to allowing a merchant to swipe a credit card, is that if I've got Square set up on my phone and I walk into a Starbucks, they know because of my GPS location that I'm there, and my face comes up on the Starbucks screen. This is at least theoretically where this is supposed to go. And so then, they're literally looking at my face in a screen and can verify if I'm that person in front of them about to buy a latte. So it's not necessarily thumbprint, but there is some kind of bio way of verifying identity.
Interesting. Thank you for that. That's a lot of identification. So this is probably for Rob. Can states play a role in establishing consumer protections in this area? Also, maybe Michelle wants to jump in. And are there risks that market players will push their systems and consumer interests will be left behind?
I think, Michelle, you should take the first stab at that.
Sure. So in terms of what states can do, it would be basically to adopt a similar rule with like the CPUC or the California Public Utilities Commission did here to provide consumers with similar chargeback protections for direct-to-carrier billing. If we start going down that route, instead of kind of fighting the rails, is what one of the principles that Marianne had put out earlier. If we go this newer route, then consumers will certainly need stronger protections, and chargeback rights would provide that. So states can pass a similar law or rule if their public utility agency has that authority.
Does anybody else want to comment on that one, or?
This is Marianne. I think the other thing is the fact that we're trying to have this industry work group that we speak with and meet with regularly. At least it's enabling us as the Fed, as one of the regulators, to be aware of what they're talking about and to raise issues and concerns and remind them of the consumer needs and security and protection, and also engage the regulators in meetings if we think things need to be discussed further. So it's more of an information sharing, but at least we try to find out so that they can't go too far and forget about the consumer needs.
Great, thank you. Let's do one last question. What is your thought on mobile check cashing for those who already go to check cashers? As we said, this is really focused on applying this mobile banking technology to the unbanked and underbanked that are already using these fringe financial services. So would this be useful, or what are your thoughts on this?
I can give that one a stab. I mean, I think, so I mentioned this in the presentation, I do think it is very useful, although I would frame that by saying it's transitional, right? I mean, first of all, checks are dying in this country. In 2013, government benefits are all going to be made electronically, and if you don't have a bank to accept the transfer, you're going to get a prepaid card. So that's just sort of a bridge technology, I think. That said, we're not going to get rid of checks anytime soon, nor cash. So I think it does have a value. Obviously, it's only valuable if you have some kind of accounts to put that money into. So the advantage of the check casher is I take my check on a Friday, I go to the check casher, I have cash in my hand immediately, and I can do whatever I want. And yes, I pay some fee for that, but I don't have to deal with banks or overdraft or anything else, right? So you have to convince the consumer, if they're going to deposit their check through their phone, they have to deposit it onto some kind of account, right? It could be a prepaid account, it could be a PayPal account, it could be a bank, right? If you can convince them to get a bank account, whatever it is, but you have to convince them of the value of an account, and then you have to make it easy for them to get that money out of their phone, right? So whether to make a mobile payment or to be able to get cash out in the ATM by using their phone, whatever it is. So there's a number of steps, I think, to make it a true value proposition. But I do think, that said, that if we can address some of those things, it can be really valuable, and certainly more convenient than having to stand in line on a Friday, which can take 15 minutes. If I can just do it on my phone, that's instant, and especially if it's cheaper.
Great, thank you so much. So we had a few other questions that we didn't have time to get to, and we'll try to send those out in email soon, along with a copy of the webinar. And also just a reminder, not only do we have the remittance webinar in our archives, but also one about electronic benefit cards, which ties in with what Michelle was talking about. So you should definitely check those both out on our website soon. So I just want to thank our panelists for their time, and all of you who listened in. We hope that you got a lot out of this webinar. I know I learned a lot, so thank you, everybody. And we hope you have a good rest of the day. So thank you so much.
Thank you.
Thank you.